DJ's family. Today we will be going over week 4, which was May 8 last week, the recap. Obviously, this is a little bit later than my usual Friday recaps, and that is because Friday and Saturdays are usually the days that most people hang out together, and so that is what I did instead of my typical live stream. So you have to excuse me for being human. But I'm gonna obviously still want to be completely transparent, and I kind of see these things as my trading journal, and would love to allow you guys to learn from it, as well as keep a historical kind of essentially vlog of my trades for myself. And so, as I said, as it says in the title, today's the week 4 recap, and I did get greedy, and it did cost me a lot, and I will talk about that when I get to my main trading account in Robinhood and what happened there. Feel free to ask questions anytime during the lesson. Remember, keeping in mind the G-Fast mentality. The chat is saved, and I will read your questions when I get a chance. Hey, Austin, how you doing? All right. So, ways to support the channel. There are 5 ways. Number 1 is like, comment, and subscribe. As always, it's completely free, and this content will stay completely free on YouTube for all of time. Share with others. I'm making this content for my friends so that they can learn and take advantage of what I've learned so far from trading and do well themselves. Although maybe not after this week, but I still am very confident I will do well in the long term. Number 3 is an Amazon affiliate links. It's called free-ish because you can click the link and you have to buy something on Amazon. It doesn't have to be the product that it links you to, and that will support the channel. So if you want to support the channel in some way, that's also a very great way to do so. Also, the referral links in the description for Webull and Robinhood are also free-ish because you have to deposit money, obviously. And then the last one is donations, and the tips link in the description. Never required, but always appreciated. Now, for the knowledge required for this video is lesson 1 to 7 to understand everything. And so if you at least watched to lesson 6, you should at least understand most of what I talk about today. Let's talk about my market perspective. And the reason I say cautious optimism on the side here is because I did not practice cautious optimism myself, and I got kicked in the butt for it. You can read the article. I always tweet on my Twitter account for news and videos I think are worth sharing. And I read this article about 50 million barrels coming from Saudi Arabia to the U.S. Yo, what's up, Kevin? How you doing? And it caused me to get a little bit greedy, and I got rid of the top end of my called debit spread. In order to allow me to have more upside for my SEO contracts. And unfortunately, that also means that I have more downside on my contracts, which hurt me very much this last week. And if you can see kind of my general market opinion fundamentals for S&P 500, the Federal Reserve and the stimulus and the vaccine news and the states reopening has been very, very bullish and caused a lot of optimism in the markets recently. I am still very generally bearish on the markets just because the damage has already been done. We've been quarantined for 2 months. I don't think you're gonna just bounce right back from unemployment and the destruction of GDP that has been caused so far. Hey, and also there's China trade war and tensions currently, which depending on your political belief, should or should not exist currently. And so let's go through the $100 trading account because that's a little bit simpler and quick, a little bit more detailed to go through, which I still think is really interesting to go through and talk about. And so I did 7 trades this last week, and you can see I'm able to do more trades now because I'm switching to swing trade strategies, and so it has led to much less day trades being forced to be used. And so I can trade more. Simple as that. And the first one is BLKB. It's a cloud software company. Unfortunately, I forgot what strategy I did. But you can take a look at the time and the dollar and the entry and exits and kind of maybe figure out a strategy yourself. But there was definitely a reason I got in, but I just can't remember it for the life of me. But oops, this is backwards. 52.15. There you go. And I made $1.26. So I entered at 52.15 and exit at 53.43. Since I don't know the strategy I use, there's not much to talk about there. But let's do AXDX here, AXDX. And so this is a big seesaw on the 5-minute chart. You look at that ORB strategy. AXDX on the 5-minute chart, I've entered on May 22nd, 10:53. And so let's go there right now. And you can see if on the 5-minute chart, if I open this, you can see that it always goes from oversold to overbought to oversold to overbought, oversold, overbought. And so I entered here when it showed me an oversold point here, and then it passed the 9 SMA at 10:53 right here. And so I passed the 9 SMA. Unfortunately, it actually dropped right back below the 9 SMA before finally climbing back up, thankfully, and then actually passing my take profit. And I exited at 8.50, which was a great trade. I made $1.26 on that trade. And then the next one I invested in is BJ. It's a membership whole warehouse club, and it had positive earnings. And so if you go to BJ here, you'll see that the estimated earnings was 34 cents, and it actually had 69 cents. So almost double, and you can see that obviously was extremely positive for the company. It jumped from $29 all the way up to $36, and I thought maybe there was a little bit more room. Maybe I was being a little bit ambitious here, but it pulled back here. I pulled 10.16, and I entered on this kind of second leg. Two-legged movement, and it did go up a little bit more, and unfortunately lost all of its momentum, and I exited around 11:40 and sold at 37.42. And you see I basically broke even, made about a cent on that trade, but I did have to be forced to use a day trade. I'm glad I did though, because if you see the next day, it continued to go even lower, and so I'm glad I got out at break even, because it actually went past my stop loss the next day. UVXY, as I said previously, I am bearish on the markets, and so I bought a share of UVXY, which is a volatility ETF, and expected market to come down from the China tensions and as well as the other bearish news I mentioned. But the market has been very, very optimistic. If you traded this week or last week or even this week, you would know the market continues to be extremely optimistic and very bullish. So I exited that. Unfortunately, it shows $1, but I actually lost about $3 because this is to May 25th, which is yesterday, and I exited actually today at $33.21. Next one I bought was UGAS. It's actually kind of a bad trade because I'll explain right now. If you look at the chart here, May 19th, you'll see right here that I entered May 19th, and you can see there was a recent low. May 19th is this day, and there was a recent low, and so my logic was, well, it passed the 9 SMA on the daily, and so maybe this is a major trend reversal, and maybe it will come up. And even if it doesn't come up a lot, at least I can catch some of the uptrend. As you see, it is very volatile, going up and down as markets do. But I think it was a pretty bad trade rationale. It is a major downtrend if you look at it. It's lower lows and lower highs. The natural gas fundamentals is just not very strong, which is why it didn't do very well for this trade. And so, if I hadn't, read up on a little bit more on the fundamentals, I probably would not have entered this trade. But I did, and I entered at 1947 and exited at 1866. It was a day trade. Unfortunately, just, there was no momentum on that. So 10:09 I didn't want to talk about here. So I entered at 10:09 as it passed the 9 SMA, and then it immediately just went back down below the 9 SMA, and I sold at around 12 o'clock right here when I hit the stop loss. All right, next one is Casa and CleanSpark, which is Cassava and CleanSpark, which are the biggest losses, as you can see, that I've had really in this account, and I'll talk about them why. So Cassava SAVA, I think, was a pretty sound logic-wise. If you look at the chart, May 18th SAVA, you'll see here May 18th. Here we go. Oh, nope. May 18th. And I want to show the daily because this is actually the more important reason. So I thought it potentially could be a potential overreaction. If you read the news, one of their drugs did have poor results on their trials, and that's why it shot down. And as Zip Trader says, most reactions in the market are overreactions. And I got a little bit probably I jumped the gun a little bit. Usually you want to see a confirmation of a recovery before you enter any trade. I just wanted to be I played a little bit more risky and just simply entered after the reaction, thinking like this is already pretty low. It dropped from $8 to $2, and this was not an overreaction. The market trended sideways, and it's currently at 2.16, right? I entered at about 2.2 and exited about 2.06, and so that caused me to lose $4.92 since I put my whole portfolio into that. And I'll talk a little bit about this in the takeaways. And so CleanSparks is a software and energy services company fundamentals. It got a new grant of additional U.S. patent. I bought that at May 21st here. CLSK. May 21st. Right here. And so I bought that at 12.05 right here as it passed the 9 SMA for a few candles, held above that, entered at 12.05 at $2.47, and then it unfortunately trended downwards for the rest of the day. I did not exit, did not want to use a day trade, so I held it. And unfortunately, sometimes when you do that, the market is going to come down overnight. It's called overnight risk, and so I unfortunately sold at $2.04, leading to a big loss of $13.78. And so it's always a balance between using your day trades and taking on overnight risk. That is up to you to decide as a trader whether or not it's worth the risk or not. I'm very comfortable risking my small account, and so I simply held so that I can trade more and not waste day trades, since those are also very precious. All right, so let's talk about what the big topic of today's video is, which is not taking a cautious optimism approach to trading and being too overconfident in reading the fundamentals and getting destroyed by them. So I essentially, like I said, I took off the top end of my call debit spreads for SEO contracts, allowing me to have more upside. Of course, with more upside means more downside. And the market had a bunch of optimism with the vaccine news and also the states reopening. Whether or not that's justified, I'll let that for you to decide as a trader. Personally, I do not believe it's justified, but I can't fight the market. You can't fight the trend. Market is always right. And so I learned a few lessons from this. And you can see, just from a few weeks ago, I lost about a third of my account. I'm trading at 22.6, still up $2,000 from the day I started trading on Valentine's Day this year. You can see I'm up 1.900, which is about 10% of my portfolio. Of course, that's much less than the originally really 100%, but since I put more money in, about 60% when I was trading at 33,000 just a few weeks ago. I was very comfortable risking this amount in my trade. I was believing in the fundamentals. I knew that oil would not jump up that quickly. And so even though it did come up a lot just based on the optimism, it's still trading below $35 a barrel. If it passes that, that's really my mental stop loss for my oil trade. And so then I would exit my oil contracts then. But then, so what I wanted to also talk about is I'm down 33% after 4 weeks of pretty aggressive and reckless trading on my $100 trading account. And so, I tell my friends all the time, if you don't want a paper trade, if it's not fun enough for you, you can always use a small amount of money. And it really can last a long time as long as you're trading stocks only. And you should be trading stocks anyways, because you can rarely lose more than 10% in one trade when it comes to stocks. It's way safer and really important to get good at trading stocks before you trade options, right? Because options is a derivative or basically trading stocks indirectly. And so if you're bad at trading stocks, you're going to be terrible at trading options. And so I've done pretty aggressive and reckless trading on my $100 trading account, really also to set an example and show it to you guys that you can play for a long time and do a ton of trades with $100 and learn a lot from doing that. So don't be shy, to use a small amount of money, but don't use a large amount of money, right? Because if this was a $1,000 account, I would have lost $330 instead of just $33. Or like my big account where it lost $13,000 essentially in 1 week, and that was completely my fault. Something I'm excited for is I just started investing in my long-term in my Chase account. You invest $4,000. I don't really care what it does day to day. Yay, it's up, and so is my M1 account. But really what I care about is this dividends number. And since this is the first month I invested in my Chase account, June 1st is going to be the first time I get dividends. And so, every first of the month is always a fun day for me because I get to see the dividends come into my two long-term accounts. Okay, so what are the 4 takeaways from this lesson or this video? So number 1 is learn from every trade, right? And see the next bullet for lesson from this week, which was a big lesson to me, which is it's completely fine if you're comfortable with the risk to take and put your entire portfolio into a certain position. Like me, being very confident, in my opinion, that oil is, I'm bearish on oil. Now, the one thing you should do is if you have a very large position in one particular trade, at least try to partially hedge your position. And what is hedge? Google it if you don't know what hedging means. But essentially, it means to offset your risk by taking a trade in the opposite direction. So SCO is a short oil position, or bearish oil position. UCO is a bullish oil position. And because of options leverage, it's so volatile, you can make money so quickly. You can actually make money even though you're taking both sides. Now, it's very dangerous to do this because you're actually putting more money at risk by taking 2 opposite direction trades, so you have lower return and higher risk. Don't do this unless you completely understand what you are doing when you're doing that. Remember, you can't predict the future, as the market kindly reminded me last week. Helps to hedge with a more volatile stock so you don't have to invest much in that position. What do I mean by that? So if you take a look at SCO, yes, it's been crazy the last few months because of the COVID virus. It started at $11.17 before COVID happened at the low, and it went all the way up to $67, and you can even see it's been jumping up and down, even within just the last few months, right? It's crazy, jumping between $20 to $60. Stocks don't even do that. So this is extremely volatile. Now, this is volatile, but it's not as volatile as UCO. Before the COVID virus, about February, this was trading at $300. And so this is a much more volatile stock, and so I don't need to put as much money into UCO to offset the risk that I have in SCO. And that's what I mean. It helps to hedge with a more volatile stock, so you don't have to invest as much into that position. Remember that trading is a marathon and not a sprint. There will always be ups and downs. You have to be comfortable with the money you are trading to weather the big downswings. It also helps to have confidence and know you will learn and grow from your mistakes so you can trade better in the future. The most important thing, as I always say, is risk management, and then the most important thing is to stay alive, or else you won't even have the chance to learn and grow, right? So remember that. I already mentioned this. I've been pretty aggressive trading my $100 account in the last 4 weeks, and it's still only down 33%. Obviously, down 33% sounds terrible, but when you consider that I've been doing craziness with it in the last 4 weeks, it's actually pretty cool that it still has 66% of its value to trade with. And I don't plan on reloading it unless it goes down to like $10, $20 or something. So in order to truly love something, you have to love both the good and the bad. And this is how I know I've really truly fallen in love with trading. Yeah, I lost a bunch of money, but I really, it didn't really faze me emotionally. I just learned a big lesson, a great lesson from it, and I'm super excited to continue to trade and take advantage of that going forward. A lot of people are attracted to trading by the amount of money you can potentially make, but they really fall apart when they begin to lose some money, right? They start taking even bigger risks. They're like, I gotta make that money back, which is not really the right mentality. Every trade should be independent of each other, and so that you make the right decisions and trade with the right amount of risk for your personal financial situation. So that's everything. Thank you guys for watching. Please paper trade until you're familiar with your broker platform and consistently profitable for 1 to 2 months. Hopefully you learned a lot from this video, and may volatility be ever in your favor for your trading this week. I'll stay on for a couple minutes in case anyone has questions, but thank you guys so much for watching, and I really appreciate the support. Okay. You guys have 60 seconds. Let me know if you guys have any questions. Otherwise, I have to hop off and actually make my next video, which I will be talking about in like 5 minutes, about what I invested in today and why I invested it. It's actually going to be a new series. I thought about, I don't particularly love watch lists because, oh, thanks, Austin. I don't like watch lists because, and feel free to ask questions why I ramble on, right? But I don't like watch lists because I look at all these stocks and then I tell you guys about them, but I don't enter them. Then it seems kind of odd, right? You guys are looking at them, which is not helpful because I didn't actually buy any of them. personally. So instead of talking about what I'm looking at, I'm going to just talk about trades that I actually enter, especially swing trades that I enter, and why I entered them. And what I don't want this to be, remember, read the disclaimer. It says none of this is, advice or a recommendation. But I want you guys to learn from, hey, Kevin, thank you guys so much, Austin and Kevin. Love you guys. I want you guys to learn from, my trades and find better trades or find related trades. But, ideally, you wouldn't just copy my trades. As you can see from my week performance this last week, I lost $13,000 by making a really bad trade because of my poor risk management. So I wouldn't want people to copy me, but I want people to learn and understand why I enter certain trades and, learn from that, essentially my rationale. All right, well, looks like there's no questions from anyone. I'm going to hop off and go start my next video. So hopefully I'll see you guys there. If not, as always, may volatility be ever in your favor.